Welcome back. Well, Ruchi Soya, that's a stock in focus. We just had their quarter four numbers that are flashing on the screen. Even the FY22 numbers were flashing for you on the screen. As we speak, the stock is holding with a gain of around 3.5%. But to understand what's the outlook from here on, remember the business is going to get far more dynamic because of the mix that will change. We're joined by Mr. Sanjeev Asthana, the Chief Executive Officer, who joins us on the show. Hi, Mr. Asthana. Good speaking to you, sir. Well, let's get a couple of details going. You've had a good year last year, 1,500 crores of Ebitda, which is no mean feat. It's quite a good number that you have delivered. But break it up for us. How much of that 1,500 crore was from the oils business, and how much of it was from the food business? You had acquired part of the Patanjali business that came into your books. So break that up for us, and then we'll go forward to your FY23 Ebitda.
So in terms of good to sort of be on your show, basically our Ebitda is on three levels. One is the businesses that are annuity businesses like, oil palm and wind power. We have got edible oil business and we've got the foods businesses. So foods business Ebitda will kick in at a much larger level in the next year. This year, the split is between 60%, which has come through edible oils, 20% through the foods business, and about 20% which has come through the non-food, non-edible oil businesses like oil palm and wind power.
All right. So you've given us a fair idea on that. Now, Mr. Asthana, the street believes, given that you're going to be getting the larger part now of the business, that's the food business that will be coming into the listed entity, Ruchi Soya. They believe that FY23, the Ebitda number will look something like around 2,500 crores, or I think you have given a bit of a hint on that as well. Is that the number we should work with? And if yes, what should the breakup be for the coming year? That's for FY23. Go ahead, sir.
So broadly, the plan is pretty much around the number that you've spoken. And directionally, we do believe that foods business, which did almost 4,000 plus crores in Patanjali, we should get that integrated, in our business by end of June for sure. And that should give us a clear 3 quarters of run on the foods business. Our nutraceutical business continues to evolve and grow. The biscuits, breakfast cereals, and noodles are continuously growing. And likewise, our Nutella brand that gains momentum. So in terms of the, the revenue mix, we clearly are expecting that we should be, 1 quarter should get, now should be largely coming out of the foods business. 75% or thereabout will be rest of the businesses. But in terms of the contribution to the P&L, I would say the split will be nearly 45%, which will come out of the foods, and the rest of it will come by the edible oils. And that is a directional, growth path we have charted for ourselves, that the quality of profits should be more consistent, more predictable, and superior, what we are able to demonstrate, to the investors and all our stakeholders.
Hi, Mr. Asthana. Morning. Globally, this shortage of edible oils is becoming a big problem now. What are the kind of disruptions you're seeing in the supply chain? And, does it offer you any sort of an opportunity for exports?
So it does. I mean, clearly the disruptions have been there, and one of the redeeming features of our operations last year has been that despite all the disruptions that we witnessed, whether it was COVID or supply chain or ban out of Indonesia or the war which is going on in Europe, we have not only kept pace with our numbers, our volumes have grown, our revenues of course have grown, and without any disruption. So it gives us 2 challenges. One is that, will this become more intense and more difficult? We believe, the jury is still out that how difficult it might become. But my guess is the worst is behind us and we should improve. And also it gives us an opportunity for a very structured play with long-term relationship with suppliers, with strong supply chain, etc., that we should be in a much stronger position to tide over any difficulties which are there. So I'm very positive that, Ruchi Soya will not only benefit, but it will tend to grow, at the cost of the smaller players or, less organized ones. And we're working towards that.
Mr. Asthana, just getting back to the Ebitda number, 2,500 crores, 45% comes in from the non-oil business. So the food business, approximately 45%. That would mean that around 1,100 crores from the foods business is what we're looking at broadly?
Yes, it should be about that number, and that's exactly what we're targeting as well. That consistent, that proportion will grow.
Yeah, because the street is very, very excited about this part of the business. They refer the oil business to more commoditized business. This is where value will come in. Talking about market share in the edible oils business, what is it currently, and how far away are you from the leader?
So we are, about anywhere between 8 and 9%, the market share of India's edible oil market. And we are good, 6% away from the leader. And but we're catching up. Our volumes are growing consistently. It's coming at the cost of, a whole range of players. And the market is also consolidating because the sheer amount of working capital required to run an edible oil business has become very challenging for smaller players. So it gives us an opportunity, with the capital base that we have, the debt-free balance sheet that we run, to certainly expand that business. And the second part, which is important to us, is that, as we build up the branded portfolio of edible oils and Vanaspati, we are really hopeful that, our margin profile on the edible oil side will also look far better than what we've been seeing in the previous years.
By FY25, what is the revenue mix that you see between this oil and non-oil business? And, given that you're bulking up on the food business now and that has higher margins, what is the upside that you see for blended margins?
The target is pretty clear that in next 4 to 5 years, we'd have more than 50% revenue, accruing out of foods business. And, that of course depends a lot in terms of how the edible prices, oil prices behave. And I'm reasonably confident that 2/3 of the income or even larger will accrue out of foods with non-edible oil businesses. And that is far more predictable, that is far more robust, and is certainly a lot more than edible oils.
Mr. Asthana, if you get 50-50 on both those two businesses, the Ebitda number will be far higher from the foods business as well. So we'll wait by for that. Final question before I let you go. Currently, the promoter holding is at around 80%. Now, the street is wondering how you're going to bring that down. Will you be looking at placing this 5%? Have people approached you all for that 5% stake to bring it down to around that 75% by the end of this year? And also, do you have a timeline where you want to demerge both these two businesses? Because that could be the big value unlocker. Go ahead, sir.
So 2 parts. One is that I'd like to remind you that there's another big news that we declared, which you didn't ask about that Ruchi Soya has also declared a dividend of 5 rupees, which is almost 250% dividend on the face value of the share. And for a company which came out of NCLT process just barely about 2.5 years back, and the sheer momentum and, how in terms of the commitment the board had, Swami Ramdev ji had also committed earlier. I think in terms of enriching the shareholders and continue to sort of drive on the growth path that we have sustained. To your question of, the whole business of how it goes forward, there's a lot of interest we have from investors, both strategic and otherwise. We have multiple options of diluting. So, we still have to have till December to dilute this additional 6%, by which we will go forward with that. So we'll see that. I think very shortly you will hear about that as well.
Okay. Demerger?
No, nothing on cards right now. Right now, we just want to consolidate and grow the businesses, what we have committed to the stakeholders. And that's what we're taking.
Well, it's been good speaking to you, sir. The street likes what you're saying. We're going to hold you on those numbers. You're sounding very, very optimistic. As we speak, the stock moves to the high point of the day. It's been good speaking to you. Looking forward to chatting up with you rather soon. Well, for the time being, though, let's shift focus, as promised, to the commodity markets. Manisha is waiting by with that one commodity that she's tracking very, very closely. Manisha?
Well, I'm looking at the food prices because, while we are talking about inflation and tackling it too, and not just India, various governments are trying to do that. We have seen some coming off of the food prices from its highs. One statement that Russia made out was that they are opening up safe corridors to allow ships to leave ports, not just on the Black Sea, but to the Ukrainian port as well. And that means a lot of food which has been stuck on these ports could perhaps be coming into the global markets. And then, as I said, not just India, but countries are taking measures to curb prices, ensuring that there is no stockist holding or hoarding for that matter, and that clearly seems to have impacted the prices here. I'll start with wheat because the prices have come off from 14-year highs onto this one. This one has been in conversation, especially after India banned exports here. We have seen prices come off its 14-year highs in the international markets as well. The high that we saw after India put a ban was at $12.80 per bushel. It's trading at 11.46 right now. That's more than 10% of a decline from its highs. But on year-on-year basis, we still are 72% on the higher side, as you can see. The other commodity that I want to put on screen clearly is cotton. 11-year highs in international markets. The Indian prices saw an all-time highs at 50,400. We have come off from those kind of levels. Reasons being, one, the US crop is 54% sown, which is much higher than the average and as compared to the last year as well. Demand from stockists seems to be easing as governments are talking about cotton. In the Indian markets as well, we have had that warning to stakeholders to curb prices by themselves, or else they will be looking at some action. In case of cotton as well, from 158 off an 11-year highs, we are trading at 141 right now, which is 9% off its highs, but still 73% higher on an year-on-year basis. That doesn't seem to be really breaking down. Corn prices also have come off its multi-year highs. High was at 8.10. We are trading at 7.6 right now. That is 6% off its highs, and we are still 17% up on an year-on-year basis. I also want to put sugar on the screen, and while the high for this year was in the month of April at 20.8, we did see 20 cross yet again after India restricted sugar exports. But since it is still within the quantum, we did see prices decline to 19.5. That is where they are trading today. It is 5% off from this year's highs, still 18% on the higher side in the international markets, while the Indian prices have gained up by 6 to 7% in the past 1 year. So there's a big gap on where India saw prices gain and the international markets. But the good news is that the food prices or inflation really seems to have come down, at least for this week.
All right, Manisha, thanks very much. A quick break. On the other side, we'll talk about the market technicals. Joining in will be Mitesh Thakkar of earningwaves.com.